Let's talk about one of the building blocks of technical trading: support and resistance. If you've ever looked at a price chart and wondered how traders make sense of all those ups and downs, then you're in the right place. Because understanding support and resistance can open the door to smarter trading decisions. Alright, imagine a ball bouncing on a trampoline. No matter how hard it's thrown down, the trampoline cushions the fall and bounces it back up. In trading, this trampoline is what we call support. It's the price level where a stock or currency seems to find its footing over and over again. When the price hits this level, buyers tend to step in, driving it back up. Now picture that same ball, but this time it's bouncing up and smacking into the ceiling. Each time it gets close, it struggles to break through and falls back down. That ceiling, that's resistance. It's the price level where selling pressure kicks in, causing the price to reverse downward. Understanding these levels can help traders make smarter decisions, navigating the ups and downs with a clearer strategy. So, how do you trade these levels? Let's break it into steps. First, identify the zones. Support and resistance aren't always razor-thin lines. They're more like zones where price reacts. Look at a chart and find areas where the price repeatedly stops falling, known as support, or stops rising, known as resistance. This could be based on historical data, psychological price levels, like round numbers, or moving averages that the price respects. Once you've got the zones mapped out, the next step is figuring out your trading strategy. A classic approach is to buy near support and sell near resistance. For example, if you see a stock dropping toward a support zone, you might wait for confirmation, like a bullish candlestick formation, before jumping in with a buy. Similarly, if the price is climbing toward resistance, you could look to sell or even short once it shows signs of rejection. But here's where it gets interesting. Sometimes, the price doesn't just bounce back, it breaks. When this happens, what was once support can flip into new resistance, and vice versa. For traders, these are breakout opportunities. If a stock breaks above resistance, it could signal strong buying momentum. And that's your cue to consider an entry point, setting your stop just below the breakout level to manage risk. Now what about traps? Not every breakout is real. You'll encounter false breakouts where the price briefly moves past support or resistance before snapping back. This is why many traders wait for confirmation, things like increased volume or a few additional candlesticks in the same direction before fully committing. Finally, always think about risk management. Set your stop-loss orders in case the trade goes against you, and never risk more than you can afford to lose. Learning support and resistance is like understanding the rhythm of the market. It's not about catching every moment perfectly, it's about making informed decisions when the price reaches those key levels. So, grab your charts, mark those zones, and start practicing. The market may be unpredictable, but with support and resistance, you'll always have a game plan.